Thanks for joining me. Great to have everyone here. Why don't we start with looking at perhaps the sort of demand outlook, or shall we say, the questioning the reality of the demand outlook for battery class materials. Whether how do you make sense of that as an investor or an analyst, or when you're looking at mining projects, and how do you make your decisions based on where you feel that demand is actually going to be? Aline, do you want to kick us off with the view from Pala, perhaps?
Sure. So I think from us at Pala, we invest across the raw material space for electric vehicles. It's been 4 years that we are quite heavily invested in the strategy. And the way that we look at it is that you have to really combine what is the base demand for those materials and what is the electric vehicles demand, and how those two layer on each other. So you cannot just, because particularly in my side of the business, where it's liquid investments and I have to do a return every year, you cannot just buy copper and on the back of electrical battery demand. You have to understand the macro inputs that will go into copper. You have to understand how investors will look at that. But the way that we do it, we have a long-term, by long-term I mean 5 to 10 years, very detailed estimates of electric vehicles. We do top-down, what are the chemistries that is going to be on those electric vehicles, and then we understand the cycles between policies of those electric vehicles. It's very important still for the sector. So you've seen, for example, this month, electric vehicles are down about 45% year on year in sales in China. It is very particular for the policy-driven slowdown, because China is focusing having manufacturing and selling 2 million electric vehicles next year. So you got to understand kind of the small cycles and the base of the industrial demand that goes into there. So that's the way that we build it, top down and bottom up, to have a view. And on the other side, you have supply characteristics of each of these metals, which are quite different. So you have metals like nickel and like cobalt that are having quite interesting supply side dynamics that, combined with the very positive demand background, makes them very bullish setup for the next couple of years. You have other metals and minerals that are slightly more oversupplied in the short term. So the way that we do it is really the top-down, bottom-up, medium-term, and layering down these mini cycles within it.
Okay, you got your work cut out. Excellent. Caspar, you're one of the leading data providers on.
Yeah, I mean, we're very aware that with the exception of nickel, but for the minerals that we cover, there's a number of factors for each of them which, depending on how you view the market, can make a supply-demand difference in 10 years' time greater than the total size of the market. So for us, certainly, the main thing that we focus on is, for our data collection, is boots-on-the-ground approach. So we go to the battery plants, we go to the cathode makers, the mines, etc., and collect our data firsthand. I think that it's certainly challenging for investors at the moment to make sense of what's going on. We're trying to make sense of markets that don't even exist yet, largely speaking. And for us, certainly, trying to, we have a bottom-up model, but we're looking at demand and inferring raw material demand from that. But also we track developments in battery production capacity, cathode production capacity, anode, etc. And that way we can triangulate and intersect data and make sure that all of our assumptions ring true to where we think raw material demand will be in the future.
Thanks. Simon.
I work for Techmet Limited. We're a private company investing in projects and developing projects that are supplying the raw materials for the battery metal space. So as a private company, we're investing mostly in other private companies and private projects, and that allows us to have a longer-term view than some. If you're, like Aline, focusing on the public markets, I would say at the moment it's very difficult, and the reason it's very difficult is because it's highly volatile. And one of the reasons it's highly volatile in this space is because you're dealing with the laws of small numbers, basically, where we know, and we've been talking about this, the metals that go into lithium-ion batteries, nickel, lithium, and cobalt, but it's still very small numbers, such that one mine, you turn one mine off in the cobalt space, and that can make a 20% market difference. It's not going to be that way for long, because the market is going to grow. It is going to grow because the demand is certain. The demand for electric vehicles is going to happen over the next couple of years, and it's going to happen a lot quicker than I think most people realise. And once you get to a size where one mine doesn't make a difference, the volatility will reduce, and the public markets, I feel, will come into that space. But at the moment, I'm more focused on the trend, and the trend is definitely growth for electric vehicle metals. And the trend on the supply side is concerning. And that's where Techmet's going to make its returns, by helping to build those projects.
Yep, excellent. And
I don't really have a lot to add to this. I mean, I think I agree with you. The trend is definitely positive. But, people look at the number of vehicles, the number of electric vehicles that are going to be sold over the next decade, the battery pack sizes, the chemistry, and everyone comes up with a different answer. The only sort of trend here is that it's going up, right? But the delta between the highest and the lowest forecasts when you come to 2025 or 2030, it's massive. So it really depends how much you buy into the story. And obviously, we're a mining company. It's actually Eurasian Resources Group, ERG, but we're a privately owned mining company. By, I would say, 2021, we're probably the biggest supplier of cobalt, miner of cobalt globally. So, we're obviously long. We have to be long. And we just see a very positive trajectory over the next decade.
Yep.
Can I address the point? You say the delta between the lowest and the highest forecast is massive, but the delta between the current level of production and even the lowest forecast is also massive. So I'm not sure that's what you need to focus on. Whether it's going to be 800,000 tons going into nickel or 1.2 million tons, I don't think that really matters to someone looking at making nickel investment for the next 5 to 10 years. It's going to matter at the time, but as you say, the trend is there, and
Yep.
the trend space is so much higher than the current level.
Yeah, so the real question then, I entirely agree with you, but the real question then is, how expensive is it going to be to bring on this additional supply? And that varies by commodity. I think it's very positive for cobalt. It's quite difficult to bring on new capacity because it is predominantly byproducts. It varies less for some of the other commodities.
Okay, and is the capital there going into these projects to bring that supply on? Are we going to see a supply side crunch in the short term? That's going to...
No. And the short answer is, from our perspective, we're definitely seeing a lack of capital flowing into the upstream part of the supply chain. So I track, as part of my role, the build-out of lithium-ion battery production capacity. And I think about $40 billion has been deployed since January into new capacity. I don't think, $40 billion in the last few years has gone into these, commodities at the upstream end of the market. Now, there's a number of reasons for that. But primarily, at the moment, particularly with some of the lithium cobalt price relatively low. It's actually not that low historically, but compared to where it was a couple of years ago, it seems to have kind of shaken the market. But the reality is, this is a time to invest because it's only going to get more expensive from here. And I think the next time these commodities go up, they're not going down for a long while.
Yep.
There is a lack of awareness of how difficult mining is and how difficult it is to produce commodities in the battery space. There was a report published a couple of days ago by MIT, and it had some interesting conclusions, but we can talk about that if you want. But I was responding to a couple of people on Twitter, and there was a Dutch battery researcher who's a very smart guy. I must say, I really respect his research, what he does. But he sort of tweeted just quite innocently, oh, hey, can anyone sort of send me a report as to at what price the cobalt that is outside of the DRC in China becomes available? And I responded to him and said, what cobalt outside the DRC in China? Like, there literally isn't any, and there is no price. And then I sort of went through some really simple maths where I'm going to be very general, so don't pick me up, especially you on the finer points here. But essentially, most cobalt, okay, sort of 2/3, 3/4 of cobalt comes from byproducts of copper production. It's essentially roughly about 1/10 of the grade of copper. So, if you double the cobalt price, you're only going to add a few % margin to that copper mine. So even if it doubles or triples from here, it's not really going to incentivize these low cobalt grade copper mines outside of the DRC or Zambia maybe to produce much. It's a real problem.
So it's the economic viability of those new discoveries. They're not going to come through.
It just doesn't work. The maths doesn't work. But the interesting point for me is where that question is coming from. It's coming from a very smart guy, but just slightly down the chain. And it just shows that ignorance of our industry, of the mining industry.
Yeah. Do you think also that... sorry, go on.
I would just like to add to what you said. I mean, we had a presentation yesterday about the supply pipeline for copper projects. And as you correctly pointed out, most of this stuff, most of the cobalt comes from copper-cobalt deposits. The copper supply pipeline there's very few projects that are going to get financed over the next few years because there's a lot of new projects coming on stream. You're going to have to wait. I think it was from Colin Hamilton who presented yesterday morning. And I think he pointed out around 2026, that's when you should aim to have the new sort of cycle of projects coming on stream in the copper sector. So this sort of compounds the problem that if you don't get copper projects on stream, how will you get more cobalt on stream? Because it is generally a byproduct.
For me, the most interesting case is that all cobalt is not cobalt, and this is what Pala is invested heavily on. Clearly, from the battery manufacturers to the car producers, they want certified in location of where this material is coming from. They want to make sure that this material is coming from ESG safe sources. So you're clearly going to see a bifurcation of this market already happening. You have the Chinese market who is still super heavily invested in the DRC and will get the metal into the battery business in China for electrical vehicles in China, but you have someone as BMW who boldly said they won't buy DRC cobalt. If you get cobalt as a commodity is already quite bullish setup, particularly after Mutanda has come offline. And then when you get a particular portion of that cobalt, which is 1/3, the ex-DRC cobalt, then you see that the growth in demand is actually coming for this 1/3. And then who's going to provide for Northvolt, for BMW, the non-DRC or certified ESG cobalt? I think the market is extremely bullish. There's no way to look at it and not be positive about it. So I think the thematic of ESG, how these things are mined, where are they coming from, how are you certifying, is only going to increase, going to get more important together with the demand going up. So I think it's a very bullish set.
The thing I'll add to that, I'll say, there's two things. Like in the near term, there will not be a lithium-ion battery industry without DRC cobalt, right? That's where the volume has to come from. And the problem that automakers will face, BMW saying we're not going to source DRC cobalt is, so outside of the DRC, you're largely, with a few exceptions, you're looking at buying cobalt metal, which not all forms are relevant of the fact that not all forms are suitable for the battery industry. The other thing is that you're competing with the superalloy industry who are far less price sensitive, right? They're putting like 100 kilos of cobalt in a jet engine, and the jet costs over $100 million. So what if you pay an extra few dollars? You're an automaker, that extra few dollars on your cobalt is your margin, right? You can't afford to compete with that industry. So you want to buy cobalt hydroxide that's produced in the DRC and largely goes to the battery industry. So that's one thing. The other thing you're looking at is, where's the new cobalt supply going to come from? It's going to come from nickel mining, probably HPAL projects in Indonesia, which, HPAL's had a very mixed history in terms of success. Typically under-delivers on capacity and over-delivers on costs. So there's problems for the industry there. But, we still think that really those incremental tons that the battery industry is going to need, a lot of that will come out of Indonesia. It's just when, at what cost.
Okay. Yep. Any other thoughts on cobalt? Michael, you're...
No, I think Caspar is entirely right. That there is incremental capacity coming out of Indonesia, but they are generally based on HPAL. HPALs are difficult to operate, and they generally cost more than more than, in addition to what Caspar said, they generally cost more to construct than people think as well.
Yep.
So just to go on that, to explain, Indonesia produces mainly nickel pig iron. Nickel pig iron is a process of nickel that does not recover cobalt. When you turn that process into HPAL, you have cobalt byproduct. So cobalt price is extremely relevant into the input of the nickel as well. So HPAL becomes increasingly more attractive with higher cobalt prices. So this is what the loop in nickel happens on the supply side as well. With cobalt at 40, HPAL starts looking extremely more interesting than nickel pig iron. And the way that you convert these things is that you can have nickel pig iron that can be converted into nickel matte, and that can go into the battery industry is one route. The other route is to produce a Jinchuan type of facility, very high capex HPAL plant that will produce nickel sulfate and cobalt matte. So the choice between these two types of productions will be connected in the center by the cobalt price because it's quite relevant for that. So likely the cobalt price will have to spike quite relevantly to incentivize the nickel pig iron coming from, turning from nickel pig iron into HPAL, which are very high capex projects. So you answer. I don't know. I don't have the answer. What is the price that will do that? But that's where the answer is. It's like that's the source that will come in, and the price is quite high to make the decision of putting billions of dollars on the ground in Indonesia. And also you're having to have much more energy-intensive business, properly building your energy plants around it and figuring out how you're going to turn your waste oxide into it. So I think it's quite bullish set.
Okay, let's look to China now. And Aline, I know you did a trip there, so I'll ask you a little bit about that. But China is the driver of so many of the metals groups, the downstream element, the EV manufacturers, and what they're doing on the battery side. What's the view, sort of looking ahead from China with their new policy changes around EVs and subsidies as well?
Yeah. So I think that's incredibly interesting, and that's why we are quite bullish into next year for these battery metals. So this is still, as we said, you have a trend. That trend is non-linear. So take this year, for example. At the beginning of the year, we were seeing 60-70% growth in sales because they're front-loading sales for an incentive of tax reduction in electric vehicles in China. And now we're seeing 45% negative year-on-year sales. So that's how much policy is driving up and down the market. So you'll have a trend. The trend will be certainly up, but it's not going to be a straight line. It's going to be with the curves. And then you have to understand, what is happening with that curve in the short term. Looking to next year, there is a very hard goal of producing 2 million electric vehicles in China. They produced 1 million last year. Next year, they want to produce 2 million. And so how do they, make that target? Once you can just say, okay, they're going to sell 2 million every year, or you're the Chinese government who wants to flag that you succeeded and want to make sure you sell less electric vehicles this year and to sell more next year and make sure you're meeting 2 million. So I'm very confident, having been there in China, that the reason why these incentives in tax have been reduced is for them to strategically reduce the sales of electric vehicles in this second half to increase it again in next year. And how do they do this? One is the incentive of tax. The other is license plates. So getting a license plate for a car in China is not that straightforward. You can have a waiting list. You have to pay for them in certain cities. It depends quite geographically. But what they can do is fast forward the license plate availability. And the third thing, 80% of electric vehicles in China is actually not end consumer like us. It's either shared mobility, taxis, or government owned. So the government fleet, if you look at the government portion of sales of electric vehicles in China, reduced quite a lot this year. So what we expect next year, we expect the government to come back, and it goes really rapidly. It's just turning one city, saying all government cars and all government officials will have to, drive an electric vehicle in Shenzhen. They make this objective very easy. So I'm very, very bullish and very confident that people will be surprised on next year's EV sales in China and outside of China, and the analysts that have reduced their expectations because of the short-term blip that we're seeing will have to then increase next year again.
Do you think it'll create some consolidation as well with the volume of producers of electric vehicles in China? There's some sort of 50 odd, and some of them are not as sophisticated as others. The range of their vehicles are not quite as extensive as others.
Exactly. So the other objective of these lower sales this year, in this half of the year, is that China doesn't want the low quality small player to be alive. And those tax incentives were keeping them at breath. What China wants to do, he wants to consolidate the industry into larger players that produce high-quality vehicles. And high quality doesn't have to be Tesla, but high quality means safe vehicles. It could be an entry-level vehicle, but an entry-level that is reliable. So there is about, if you talk with the car dealers, they think about at least 5 to 10 brands or producers of low-quality vehicles are going to come out of the market, either through bankruptcy or through M&A, government-sponsor M&A.
Okay.
I'd just like to add, I agree with everything that you're saying, but we shouldn't forget that this isn't only a China story. I mean, China definitely kicked it off. They are growing the fastest, but we're right on the edge of seeing the China story happen in Europe and the US, where it's taking off very slowly, but in the next 12 to 24 months, you will see massive changes. And I'll point you to a few announcements just over the past few weeks. Take here in Europe, for instance. The European Investment Bank just said they will commit 1 trillion euros to renewable, sustainable energy and sustainable economy overall. This impacts batteries because if you want intermittent energy generation, wind, solar, you're also quite likely to have batteries associated with that. They will also phase out all fossil fuel investments or credit by the end of 2021, I think. This is a huge change that is happening in Europe. And if one very big bank does it, other banks will follow suit very quickly. In the States as well, we see ongoing battle between 20-odd states and the federal government around fuel efficiency. This will keep going. These states are adamant that they will win, and they will commit to fuel efficiency targets that may be tighter than under the Obama administration in these specific states. So all of this is driving consumption of batteries. Electric vehicles, obviously the fastest growing, but also battery energy storage systems. And I think as Caspar, and I'll let you talk on this, but one of the things that I've heard Caspar say many times is, why are they using lithium-ion batteries? My question, why are they using lithium-ion batteries and battery storage systems or a bunch of devices where you could potentially use lead acid or LFP batteries, which are lithium but non-cobalt bearing? And the answer, I believe, is because they are most readily available. If you want to go out shopping for batteries right now, you will take a typical NMC battery, which does contain nickel and cobalt and lithium.
And that's because they've been invested in.
Absolutely, capacity has run up so fast, and Caspar can talk much more about this.
Yeah. So I mean, if you want to put something in place quickly, we've seen literally hundreds of billions of dollars deployed into the lithium-ion supply chain. The ESS market is ripe for disruption from lithium-ion, right? So there's things like flow batteries are one of the kind of key competing technologies. But if you want to do it now, it's not easy to do that with flow batteries, whereas you can go to a handful of, actually more than a handful. We're tracking 100 and current numbers as of yesterday, I think 106 battery plants, lithium-ion battery plants globally that will be in production by kind of over the next few years. And you can order your batteries and get them, and you've seen battery costs go from well over $1,000 per kilowatt hour 10 years ago to despite what MIT say, to under $100 per kilowatt hour today. So you can do it very cheaply. Now, is it the best technology? Potentially no, not for ESS, where energy density isn't so key, but it's not always the best technology that wins. It's availability. It's also kind of the way the market goes, VHS Betamax type thing. But yeah, I think ESS, theoretically, when we're looking at kind of the bigger, large-scale investments in the future, you could see some disruption from lithium-ion.
How long have we got lithium-ion batteries until, roughly, do you think?
Oh, God, billion-dollar question.
Yeah.
I mean, for the smaller-scale applications, I think lithium-ion works. It's like when the utility companies make really huge investments, maybe then it would justify, someone production line for them alone. But yeah, as I say, I think flow batteries look quite competitive in ESS markets.
Yep. Simon, you were going to jump in.
I think I said this exact same thing when I was on the stage at the last conference, that lithium-ion batteries are just about good enough, and they are going to be around long enough for you to make an investment decision and make a decent return over a good length of time. And that's what Techmet is doing and why we're doing it. That's why we're in this space, because yes, lithium-ion batteries have problems, but we can engineer around those problems to solve them such that we can use them in a safe and practical way for our lives. We can use them to power vehicles, we can use them for our laptops and phones and the things that we want to buy and own. So it is going to be dominant, and as Caspar said, there's so much money being put into the development of these now and that's not going to stop. Okay, there may be new technologies that come in that might take a part of that market share, but it's at least a couple of decades of this, let alone the fact that any new technology, to get to the point of being safe, let's not forget lithium-ion batteries have been around for many decades of running and sometimes safe, and then you find a solution to, etch away at that and make it that little bit more safe and that little bit more long-running and cheaper and better. So any new technology has a huge runway to get into your pocket or your car.
Yeah. Sorry.
No, I think just that the de-risking of this technology, I think, is also underestimated by the market. Before, BMW put billions and billions in dollars increasing so much the electric vehicles choosing this type of batteries. You could say, there could be another technology that could come in. After you put that kind of capital, you're going to improve on the margin in that technology. Technology has been chosen. Not saying it's going to be the technology for the next 30 years, but there is an extremely high incentive to make this incrementally better rather than completely shifting your production line that you just invest billions of dollars in. So what just happened in the last 2 years, I think it is quite positive for the lithium battery.
I think I'd just like to add as well, you can't underestimate the entrenchments of lithium-ion batteries. It isn't only the billions of dollars put into capacity to actually produce them, but it's the software management system, it's the packaging, it's the module making, it's the transportation. All of these things just make lithium-ion more and more entrenched. So, I think the general consensus, and Caspar might have a different view on this, but general consensus is that lithium-ion batteries over the next decade, maybe more, the focus will be, in terms of battery technology, to improve lithium-ion batteries, and not necessarily whole, scale change to another battery.
Mix, yeah.
Yeah. Just to add to that is the thing with lithium-ion is not only are they getting cheaper, they're getting better. So we're, over the last few years, a lot of the focus on improving lithium-ion has been for EVs and seeing better energy density coming out of the cathode, which is moving towards higher nickel, which is going to take a lot longer than people realize anyway. But now the industry is looking at other ways, not just kind of more energy dense cathode. Huge amount of research going into the anode side. Even on the cathode, it's not necessarily changing that blend, but changing the way we produce it, single crystal, things like that. So you're competing with a technology that's getting better and it's getting cheaper. And the next kind of technology for EVs, people talk about solid state. It's extremely challenging for solid state to get to commercial scale, particularly when you look at the investments that have gone into lithium-ion and how good it's getting. So, it's certainly it's going to be here for a long time yet. I don't envisage anything changing in transport for at least a decade, but probably longer, just because they are very good batteries and they are becoming incredibly cheap.
And just to add to solid-state batteries, I mean, solid-state batteries doesn't change a whole lot in terms of the cathode components, right?
Yeah, that's right.
You're still stuck with nickel and cobalt typically. So in terms of an investment proposition, solid-state isn't such a big game changer. It makes better battery, for sure.
Theoretically.
Well, theoretically, safer battery, absolutely, if it can be done in a sort of large scale way.
I see we've only got a few minutes left. I'd quite like to bring it back to the prices of these commodities, because I come to quite a few of these conferences and see speakers talking about specific commodities within our space, the nickel, the cobalt, the lithium. And as we said at the start, they are volatile at the moment for a reason. And the volatility has led to them being too low, just too low to achieve what this industry wants to achieve. And make no mistake, this industry is going to achieve it in some degree, whether it's the lower forecast we were talking earlier or the higher forecast. Doesn't actually matter. You're still going to have to increase each of those metal productions globally by multiples, which just doesn't happen in mining. It's never happened in history like that. And so, and on top of that, you're dealing with a demand for, let's take nickel for example, a demand structure that's increased by 5% just for stainless steel, mostly over the last decade or 20 years, 5% per annum growth. That's not really going to slow down because the world still progresses at that steady pace anyway. So the moving factor for us is the fact that, okay, there is going to be volatility in the price in the next couple of years, but even medium term and definitely long term, the prices of these metals are going to be higher than they are today. And the reason I'm 100% confident in that is because the prices that they are today, people are losing money. Lithium production has been closing and shutting down. You know, you see Sherritt and Eramet, quite big nickel producers, making losses right now in the last quarterlies. Cobalt producers closing down, you know, and suspending production until the price gets better, yeah. Right? So the real data is telling you that the prices are too low. Now, traders will be traders, and they'll play around with the price, and they'll take advantage of that, and so it will take months, maybe, to come back. But any medium to long term, the prices will have to be better to meet that automotive demand, to meet that handheld demand. And that's what we're focused on, because that will be the reality over the next couple of years.
I would just like to say that not all traders are that bad.
But, I mean, to put it into perspective, I think last year about 160 gigawatt hours of batteries were produced globally. Now, this is a target. Who knows what will happen? VW want 150 gigawatt hours for themselves by 2025. So, you know, we're looking at all of these markets. We're tracking between 4 and up to 11x growth now, depending on which commodity you're looking at, between now and 2028. You know, that's crazy growth. And I wouldn't say we're particularly bullish. Neither are we particularly bearish. That's probably about middle of the market, depending on who you are. So, you know, for the supply side to have any hope of keeping up with where the demand side will be. And you know, it's unusual in the fact that the automakers are telling us what we're going to buy in the future because of the emissions targets. You know, this sector needs investment in the upstream. We're seeing it in the downstream, but yeah, as I said earlier, not in the upstream.
Okay. If we're bullish on one particular commodity within the battery mix for the next year, could you all pick one? Or say...
Well, I mean, the obvious answer is cobalt. But even if I wasn't, if I was an investor like Simon, I would still pick cobalt, because I do see it as the most supply constrained and requiring most capital to bring new supply on stream.
I think cobalt as well and nickel are extremely underpriced. And I'd like to say one thing as well that I think it is misplayed in the market, which is 5G networks. Maybe next year we're going to have a 5G panel on this event. China is also growing in incredibly pace in 5G. Huawei sales is 20% up. That's 30% of global demand. And those cell phones, they have double the battery. They have a battery in the front and they have a battery in the back. That's an extremely impact for cobalt demand as well. So cobalt and nickel, for supply reasons, are definitely extremely bullish setup for next year, in my opinion.
Okay. 5G it's going to be very hard to roll out nationally or beyond sort of condensed urban areas, though. Yes. The infrastructure is very intense.
Yeah, so it will be area by area, but the point is you convert Beijing into 5G, and if you see cell phone sales, they're already coming down from people waiting 5G to buy these phones. And you see, the phones are out there, and they're in waiting list now. So if you want to buy one of these phones today in China, you have a waiting list of 4 months. So you can see how much the production of those phones are coming in. So it comes regionally, but when we say regionally, I mean, you convert Beijing. Beijing is quite a few million people. You got to 20, 30 million people changing their phones is relevant. It's another setup for Cobalt that is quite interesting.
And the point is they're always on because you're always streaming so much stuff because of the 5G capability. So the battery demand is so much more intense.
Exactly.
Yeah, great. Anyone? Sorry, Caspar, you didn't say on your
pick a commodity the next 12 months. Yeah, I mean, I would say cobalt as well. I mean, partly that's because what I look at the most, but also with the closure of Matanda, I think that the supply deficit, the tightening of the market, has been brought forward closer than anyone else, any other minerals. Obviously, nickel, much bigger market, longer term prospect, but very interesting. And I would say after cobalt, probably lithium.
Okay. Yeah. Simon.
Yeah, from spot prices today in 12 months. Yeah, probably cobalt or toss up between cobalt and nickel. Because nickel prices fundamentally needs to be stronger. And if people are looking at new projects right now, again, the volatility is putting them off. And that needs to change.
We have 1 minute if anyone has any burning questions. There's one at the back here. Just wait for
mention on graphite and its role in these battery metals and so on. Can you give some comment on that?
Outlook for graphite quickly?
Yeah, graphite, yeah, definitely. I mean, graphite's actually one of the areas that we're seeing a renewed impetus in research, obviously improving the anode. Everyone's been, as I said earlier, been focused on the cathode, but graphite is now, and the anode is becoming a huge area of research in trying to get more out of these batteries without, trying to keep them safe, but squeezing better performance out of them. Now, graphite by weight is actually kind of the biggest content in between the anode and the cathode in the battery. But I guess the difference between the graphite market and something like lithium or cobalt is that it's a larger market, and only a smaller portion of it, less than 50%, which is lithium and cobalt, more than 50% goes into batteries. So in the future, it will have a far bigger impact. But certainly, again, another very bullish commodity in terms of demand from the battery industry, I would say.
And you'll be touching on that later, maybe in your presentation at 3:30, or
it's more battery plant focused. But I talk about all of the commodities and the demand implied from these battery plants, which is pretty big.
Yep. So stick around for that. That's at 3:30. But look, for now, thank you very much to my panelists.